Okay, let's kick off. I've got a lot to get through in 15 minutes. I'll do my best to give you a good overview to the company, a bit of an introduction, but also look at the proposition, how that's leading into a significant period of growth for us, and really what the overall investment case is for the company. So I'm guessing that a lot of you won't be too familiar, so I'll just give you an overview as to what Eckoh is all about. We've been around in the current guise really for about 12 years. And the business has two main parts to it. It has a secure payments proposition, which we'll talk a lot about today, because it's really what's driving the growth of the business. But we also have a customer contact part of the operation, which really shouldn't be discounted because it wins us a lot of business and it drives a lot of incremental value, which is really important when we win these payment customers. So I'll just briefly explain what that is. So down here are some logos for companies that we deal with. So let's take an example. So Premier Inn. If you're calling into Premier Inn or looking over the website and you're looking to maybe book a hotel or change a booking, we're actually allowing you to do that without needing to speak to somebody. If you've got a real problem and you need to speak to somebody, then we also facilitate that too. But our job is really to try to maximize the human assets that organizations have to their best effect. So we try to take the calls or the queries that don't need to be handled by people away and try to automate those or allow people to self-serve in the most convenient and meaningful and successful way. And we've had over a decade of providing solutions in that area, and we do that over the phone, over the web, and over the mobile. And I would say typically our proposition is voice and mobile based. That's typically what we go into a company with. However, for organizations like Premier Inn and others, part of that historic solution was taking credit card payments. And it's been a part of our proposition since the beginning. And in the last decade, the big car brands got together and they produced this regulatory standard which the man on the street, frankly, has never heard of, and a lot of investors have never heard of, and no particular reason why you should, but it's called PCI DSS, and you see it here. It stands for Payment Card Industry Data Security Standards, and that's driving a lot of our growth because to comply with that standard is very difficult, and it really is a series of regulations around how you should manage personal data and in particular card data. And we have a proposition which actually allows organizations to secure that data in a very elegant and easy manner, which then ensures that organization cannot be hacked or have data stolen. I think that's a pretty timely reminder given the results that TalkTalk put out today, and obviously they had a very public hack. So the growth in the business in the last 5 years since we became a compliant service provider for PCI DSS is really coming through from the payments side of the business, but we cross-sell aggressively between these two business lines everywhere we go, and it's important to understand that. We have no particular sector bias. We're working with government organizations, public sector, retail, leisure, utilities. It's very, very broad, and that's because anybody that takes card payments is in scope for PCI. So anybody that does not comply with PCI will certainly have high costs from their payment service providers and their acquiring banks, and those costs are going up rapidly to try to force people to comply. But if you suffer the misfortune of a data breach of any type, then you'll get a fine which will be based on a per record basis, and those fines can run into tens of millions of pounds. There's some EU legislation going through at the moment which could actually fine organizations on a global basis on a percentage of turnover. Now those kinds of regulatory and legislative changes are really driving interest in our proposition. So we've got two distinct markets, and our target market is global contact centers, not exclusively because we also service e-commerce and mobile, but this is an area that we are almost on our own in. There's very few companies in this space, and we are one of very few operating, and it's a global problem, it's a global market. In the last 12 months, we've won business in Morocco, Canada, South Africa, as well as our main markets of the US and the UK. As I said, two very different business drivers. It's about maximizing cost and efficiency and customer satisfaction on this side, but here it's all about really complying with PCI DSS, but also making sure that you have no fraud going on in your contact centers, and that's a big problem. You know, in any contact center, you've got low-paid employees. If they steal one credit card, which is live, they can sell that on the dark web when they get home for £150. That's probably more than they'll make in 3 days. So it's a huge temptation for these people, particularly in some of these large contact centres where it's harder to control the workforce, and they're definitely getting targeted by organised criminals. If there is a fraud, organisations do not want to make it public. It's the last thing they want to do. So typically, if somebody perpetrates fraud, they get away with it, and that is perpetuating the problem. So we help people eliminate fraud and PCI DSS compliance at a stroke. Almost a month doesn't go by without news stories. I mean, these are the most recent ones. It's important to understand that our system not only secures credit card details, but it can also secure other sensitive pieces of information such as bank account details and social security numbers. We're not saying that we could have prevented these hacks. What we could have done is ensure that the information that was there was frankly of little worth. And that is one of the reasons why the impact, TalkTalk today said the impact estimate so far is £60 million, and they've lost 100,000 customers. So it's huge, for what appeared to be relatively small numbers compared to the millions that were originally talked about. So huge market opportunity. This is UK. In the US, the single largest breach so far was with a retail brand called Home Depot. They had the misfortune of having 54 million credit card numbers stolen. And they will have been fined based upon each and every one of those. So the fines for something of that magnitude are just enormous. So we are selling a way of preventing these things happening, or if they do happen, that the impact is minimized. We're effectively selling an insurance policy, and I would say our main challenge, if you like, or our main competitor is actually people deciding to do this as opposed to not to do it. It's not about which competitor I'm going to go to, it's am I going to put this in and protect myself or am I not? And that's a decision that is for each individual company to take. I would say that right now we're winning that war more than we're losing it. So Halo is our newest product, if you like, and it's a way of securing that data in a very elegant fashion. So I'm just going to very quickly take you through this. So any organisation, whether it's a contact centre or not, will have relative rings of infrastructure. Whether you're a contact centre or an e-commerce provider, you'll have telephony systems coming into your estate. You'll have IT networks. You'll be storing information. And if you are a contact centre, you'll have agents and you'll have call recording systems. And any card data that hits that infrastructure anywhere is in scope for PCI DSS. So if that happens, then you, to comply with PCI DSS, would have to put some controls in place to make sure that that data is secure. What we can do is really help you with that by actually making sure that none of that sensitive data ever gets in. So we sit on the outside, and let's talk through a phone call because that's where the bulk of our current orders are coming from. So traditionally, when you ring up and place an order over the phone, the agent will ask you for your credit card details. Now, when you stop and think about that, that is no different to giving your credit card details to a complete stranger in the street, because that's effectively who that person is at the end of the phone. It's hugely insecure. So what we do is we provide a system where the agent can say, instead of reading me your card details, please key them in over your phone keypad whilst we're on the call. They can see the progress of what they're doing, but they don't see your card information. But they can see that you've got a valid card, that the expiry date is within the range, and that your security details have gone through and that the payment has been successful. So that information is not put in front of the agent to steal. It hasn't gone into the system. And importantly, what Halo does, it actually replaces the card number for a token, which means that they have a record of that customer that they can safely store. And that's a big difference. And because this sits outside of the organisation, nothing needs to change inside. And when you're selling, one of the big problems is, what's the project going to look like for the IT team within this organisation? And I'm happy to say that the work that they need to do is very limited indeed. So it's low integration effort, but high impact in terms of security. We've just had a patent granted on this in the last 2 weeks in the UK, and we've got previous patents in both UK and US, which is our main markets. We've already had great traction with this, and probably half our pipeline at the moment is for the Halo product. And it's certainly what's been driving both our revenue and profit growth and also our share price growth. Lots of names on here that you'd recognise. You'll see at the far side, this is about customer retention. The way that our contracts typically look, they are multiple year contracts, usually transactional based, and we normally have minimum guaranteed levels of revenue associated with that, which means that we have fantastic revenue visibility. So our recurring revenue is around 80%, and we lose virtually no customers at all. So you can see that the customers on the right-hand side have been with us for multiple years through multiple contract renewals. These companies here have typically come from the payments side of the business. If you look at the actual P&L, you can see that the conversion into net profit is extremely good. We've got about a 48% drop down from gross profit to bottom line, and you can see from this slide that actually that curve is accelerating, and that's because the market is so receptive to our proposition. When you're getting both the media and the end consumer putting pressure on organisations to manage people's data more securely, they can't just ignore that. And we're definitely seeing bigger budgets for putting these systems in place, and certainly more receptive audiences. Now, our biggest market is the US. We've only just gone into the US 18 months ago, and our contract win run rate has doubled so far this year versus last year. It's the largest market in the world, and we're expecting this kind of growth curve to continue. In terms of the headline numbers, these were the interims at the end of September. We've just bought a company, which I'll touch on in just a second. Prior to that, the market was expecting us to do around 20 million of revenue this year and around 4 million of operating profit. You can see our recurring revenues just under 80% and very high gross margins. And that's the beauty of the model. It's extremely scalable. A payment system, whether it's installed in China or the US, looks identical. Once installed, it requires virtually no maintenance on our part. We're maintaining a cloud-based platform, which obviously is multi-tenanted. So it's a very elegant and scalable business model. In terms of the analyst view, they're picking out those high recurring revenues and that operational leverage as the key focus. And they point out that we've had compound growth of 17% in revenue, but EBIT is at 83%. And I think that highlights that great gearing in the business. And you can see that again here in terms of how the admin expenses obviously a lot slower rate. To be honest, the only real impact on our admin expenses is people. That's our largest cost. If we're having to add more people to the organisation, it's really because the amount of inflow of new contracts is such that we're having to add headcount to fulfil that. Our steady base of headcount is growing probably no more than 5 or 10% a year. Just one slide on the market, just conscious of my time here. One thing that's interesting about the contact center market, people actually assume that this is a declining market. The opposite is true. It's growing at about 3% a year, and in the UK, 4% of the workforce is employed in the contact center industry. Same in the US. It's a huge industry in terms of employment, and there are thousands of contact centers that we are targeting. We typically start at contact centers of around 50 upwards. I would say our sweet spot is in the sort of 500 to 1,000 seat, but actually we can sell down to much smaller contact centers if we choose to. And our full portfolio targets every part of the contact center, both over the phone and those other methods of interaction through the mobile, like web chat, social media, etc. This is the competitive landscape. This is again an analyst view. So you can see we've got secure payment capabilities here, customer service on the side, and you can see they're placing us right up in that top corner. This is obviously a classic kind of magic quadrant slide. Very few competitors in the space, particularly in the secure payment space, and very few that have both the secure payments and the customer service capabilities that we have, which means that we can really maximize the value of each and every one of our customers. 66% of our clients take a payment product, so it is the big driver of our solution going forward. And in terms of the strategic goals, It's really about market execution, and that's typically with partners as well as direct. We work with Capita here in the UK and West in the US, and that's really spearheading the growth. We've also bought a business which I'm happy to talk to people about if they come on the stand. We probably don't have time here, but this is really going to help us really drive through the growth in the US. But it's an exciting time for the company. I've been here since the founding of the company over 20 years ago, and it's the most exciting time of the company. We're currently 100 million market cap. Certainly my ambition is to really drive that aggressively forward. We've seen a 10 times return in the last 6 years. I'd love to repeat that again. We've definitely got the opportunity to do that. In terms of the investment case, just picking out the key things, those high levels of recurring revenue, excellent gearing. We're profitable and have seen increasing profits every year for the last 7. Extremely high growth rates off the back of that high margin. And we retain pretty much every customer. So we've got the ability to grow very fast without really significantly investing in the business, and with a very small competitive landscape and protected products, we think we've got an absolutely fantastic opportunity. So we'd love to talk more to anybody that would love to come by our stand. We're out there on stand 19. And sorry I had to canter through that at a pace, but hopefully it was informative. Thank you very much.